Be greedy when others are fearful. Watch the masses and do the opposite.
So while many investors are running from the high street, Kirsty is doing the complete opposite.
If you listen to the mainstream media, the high street's dead. It's not dead, it's not dying, it's evolving because we've gone online and we order clothes online. So a lot of the people that don't like the fact that the banks are closing, pharmacies are closing, pubs are closing, that's all very true. But in their place, we've got takeaways, cafes, we are drowning in coffee and pizza. I said 5 years ago, surely we've hit the ceiling of coffee and pizza. Oh no!
Tell us what your analysis of the high street is.
So my analysis is that no two high streets are the same. But the key thing that I think a lot of people have no clue is a fact, that the top performing commercial property sector in 2024 was retail. And then people go, huh?
Building wealth through property isn't about chasing big deals and paydays. It's about owning assets that make money for you consistently. But figuring it all out on your own, that's where most people get stuck. That's why we created this Property Life membership. It's everything we wish we had when we started. Expert guidance, real-world case studies, and a private community of investors actually doing deals, not just talking about them. So you could spend years trying to piece it all together yourself, or you could plug into a system that's already working for our community. Check out our membership page at This Property Life. Everything you need to know is right there. Success is a team sport. Come join in.
In this episode of This Property Life, I'm joined by Kirsty Darkins, commercial property surveyor, asset manager, and an advisor with over 20 years experience in the commercial space. So while many investors are running from the high street and running from retail, Kirsty is doing the complete opposite. Kirsty loves the high street. She's definitely bucking the trend, and she sees massive opportunity that others are probably missing. So we're going to talk about how you can make money out of the high street, why you shouldn't be scared of it, and maybe rethinking some vacant units, unlocking some value, looking at the location. Kirsty's really going to share just a no-nonsense insight into what's really happening on our high streets and why it is far from dead.
Heads up before we start the show. This Property Life is more than just a brilliant podcast. We are also a thriving network community. We meet online every single week with different property experts and in real life every single quarter to share war stories and insider tips. And the best bit is you can get this absolutely free for 2 months. So head to the link in the description and start networking smart. So if you've ever been curious about commercial, if you've ever brought into the rhetoric that the high street is dead, then this is the episode for you, because we're going to hopefully bust all those myths and make you feel a bit more positive about it all. So I'm your host, Sarah Blaney. I'm joined by Kirsty Darkins. Welcome to This Property Life.
Thank you, Sarah. Thank you for that amazing introduction. So yeah, I'm looking forward to sharing what I've learned, what I know, what I do with high street investments, because I do think it's a missed opportunity for a lot of people. And a lot of people are really afraid of high street investments. And you know what Warren Buffett always said, be greedy when others are fearful, watch the masses and do the opposite. And there's a little bit of that in this strategy, but it's all very calculated risk.
So obviously you've come at this with, decades of experience and real practical experience, because you've actually been a commercial surveyor. Are you still a surveyor today?
I am, yeah, still a commercial property surveyor in my own practice. But yeah, I'm still active as a surveyor as well as a commercial investor myself. I invest in the high street, so I walk my talk. I'm not suggesting that anybody do anything that I don't do myself. And we invest in the high street a lot for a lot of our clients as well.
So how did you get started in surveying? Because obviously, to be fair, you're the first female commercial property surveyor I've ever heard of.
Yeah, I get that a lot. I mean, there are a lot more of us now than there used to be. So when I started back in 1999, only 5% of commercial property surveyors were female. Now it's more like 20%, but we tend to specialize in areas so we don't specialize in valuation very often. And so the areas you might come across are still very male dominated. So yeah, there aren't so many of us, but I actually did a degree in English and sociology, and then started working for a small surveying firm in marketing when I graduated, but then realized that, oh, hey, there's a whole profession here that I never heard about, that I didn't know existed, that's very sociable and very much fits my personality. So if I was going to go into a profession, it had to be surveying, because we spent a lot of time with people out on the road and in the pub, not sat drafting documents like the lawyers, not crunching numbers like the accountants, So it was kind of the only profession I could go into, really, for who I am. And yeah, I decided to go back to uni and do my master's to convert my degree, and then got a graduate job as a surveyor. And I've never looked back. So I got into surveying in 2001.
Okay. And when did you make the jump from being in the industry to actually investing in the industry?
7 years ago. So I jumped 9 years ago from corporate to set up my own practice. And then 7 years ago, I started investing in commercial property
Okay.
myself.
So that whole entrepreneurial jump, you went like absolutely feet first and did your own actual trading company and then your own investments as well.
Yeah, and I guess it was prompted by taking a sabbatical in 2014. So I'd been working like a dog for 15 years. I got all this money in the bank, but my health was terrible. I was absolutely exhausted, really stressed, and just going, I'm really not really enjoying life. Like, what's happening? So I took a sabbatical to just think and travel and get healthy and, all of that. And it was great. So I spent 10 months, I traveled through Europe, spent loads of times with friends and family, got the fittest I've ever been. And then I ran out of money because I spent it all and thought, oh, well, I better go back to work. So I went back to work for a company that I worked for as a graduate, but then I went back as a senior director. I couldn't hack it because I'd given myself that taste of flexibility and freedom. And I just went, I don't want to do this. I'm really stressed again. I don't want to live this way. This, 35 days annual leave and all the rest of it. I didn't want it. So I didn't exactly know what I was going to do. I just knew I needed to do something different. So I built up some money again, and then handed my notice in on the 22nd of December 2015, which is a very memorable date.
You know what? When you can always remember the date of something like that, that means it meant the world to you.
Mm. Exactly. It's like imprinted in my brain. I can remember handing it to the MD, and the MD saying, "Where are you going?" Because they always think you're going to a competitor. You need to know, are they
Yeah.
going to put you on gardening leave, etc. And I was like, "Oh, I'm not going anywhere." He's like, "Well, what do you mean?" I said, "Well, I mean exactly what I just said. I'm not going anywhere. I'm not entirely sure what I'm going to do yet. Taking 3 months off and doing nothing, and then I'll decide." And his words were, "Well, you're very lucky you're able to do that." And I replied with, "Well, we make our own luck." And that's what I truly believe, that's really my ethos in life, is create create the life that you want. So I've been busy creating the life that I really wanted for the last nearly 10 years now. So yeah, it's good.
So let's get straight into commercial because it is an area that's, well, massive to start with. So it really encompasses everything that is kind of almost non-residential. But you've got a particular niche, haven't you?
Yeah, I mean, I do invest in industrial and office as well, but I specialize in the high street. I always have. As a surveyor in corporate, I specialized in shopping centers and high street because it's just what interested me the most. It's always evolving. There's always something new happening. It's got pace. It's exciting. Like, a lot of people might not think about the high street like that, but that's how it is for me as a surveyor who's worked in the high street market for nearly 25 years now. And yeah, of course it's changed a lot, but it's change. It's not died. It's not dying. It's evolving. And it's evolving because we've evolved how we live, work, and play. So it's our fault that the high streets are how they are now, because all the high street is there to do is serve what we want, provide the services that we want, provide the conveniences, and so yeah, it's changed a lot. And some high streets need a whole repurpose. Others are thriving and much more sustainable. So you need to know what to look for, but they're very much not dead, and they are recovering. So I ran a webinar recently, and that's some of what I'll talk about today, is some of the facts and figures around the retail sector at the moment that really might surprise a lot of people listening. Because if you listen to the mainstream media, the high street's dead.
Yeah.
But since when, as investors, did we take the mainstream media, you know, seriously? Like, I mean, if they could invest, right? We'd believe that nobody has any money, and you can't invest safely, and doomsday.
Yeah, I mean, we'd all be hiding under an umbrella somewhere, wouldn't we? And if you
Yeah,
listen to
we
the
would,
media, yeah.
yeah, certainly.
So yeah, give us some facts and figures because I'm a bit of an analyst. I love all that. Tell us what your analysis of the high street is.
So my analysis is that no two high streets are the same, and so you need to know the key factors to look for that make a high street investable and sustainable, which we can talk about. The key thing that I think a lot of people have no clue is a fact is that the top performing commercial property sector in 2024 was retail. So
Yeah.
if I ask people, usually they say industrial, and it wasn't, it was retail. And then people go, huh? And you're like, look, it includes all retail. So it's retail warehouses, which is the best performing sector, shopping centres, and the high street. But
Oh, the retail warehouses, as in the back end of the industry.
no, so just the retail parks,
Oh, okay.
your retail parks are included in that, and they perform really, really well. But the high street is behind that, performing well. Rents are stable and increasing in a lot of locations now because they've all been what we call rebased over the last 10 years. So they've come to market rents that are affordable for businesses, and now demand has gone up and rents are going up. So for the first time since 2017, capital values across retail went up across the UK last year.
Yeah.
And for the first time since 2007, rents increased across the UK. So the retail market is actually in recovery, but if you read the mainstream press, that that's not what it's telling you. But the facts and the figures, the statistics of the commercial property industry are that retail was the top performing sector. And so you're missing a trick if you're not even considering it as, you know, a sector to invest in within commercial.
Okay, so there is obviously, everyone has an opinion, and if you go onto any Facebook group for the local area, um, the the topics of discussion will be parking, dog mess, and the death of the high street. So and I know, and we both know, um, that those keyboard warriors are a special breed, and that whatever's said on those things that is just, well, whatever. But in terms of how it's changed and why we think it's dead, what is the perception versus the reality, and what are some of those myths that we can just strike away?
Yeah. So the first myth is that the high street's dead. It's not dead, it's changed. So it's dead for some of the things that some of the people you just mentioned used to use the high street for, because we've gone online for those things. We've all got lazy and busy, and we order clothes online. We order lots of things off Amazon books, etc., that we used to physically go to, and we've all got less time. We've made ourselves busier. So what we want from the high street today is convenience and service. And so that is what our high streets are now full of. So a lot of the people that don't like the fact that the banks are closing, pharmacies are closing, pubs are closing, a lot of clothing retailers have gone online, or there's less of them. That's all very true. But in their place, we have professional services like accountants, insurance brokers, solicitors who used to go to offices but are now taking retail space. One, because it's cheaper, two, because it's more convenient, and more visible. So that's happening. Healthcare, you'll find a lot more in the high street than before. You find a lot of health practices and dentists and physiotherapists and all those kind of uses in the high street where they weren't in the high street before. Service led. So we've got your opticians, your florists, your funeral directors, convenience stores, and then we've got takeaways, cafes. We are drowning in coffee and pizza. I said 5 years ago surely we've hit the ceiling of coffee and pizza. Oh no,
No.
it it's still going. It's still going. It's absolutely incredible. But they're just serving what we want and how we spend our time. So now we go to our high street to do everything that you can't do online. So it has to be Amazon proof. Like you can't get your hair done online. You can't go and try loads of glasses on and sit with your optician online. So it has to be or destination retail. So specific things like dry cleaning. So we've got that mix on high streets now. So it's very different, but it's not dead. And I think that's the big yeah.
That tenant type is really different, isn't it, to, if we do go back, I don't know when the high street was what we all thought it used to be, but, when you had Next and Marks and Spencers and Debenhams in the high streets, the tenant type's completely different now, isn't it? So it's gone from those large global or UK-based names to smaller independents and sort of medium-sized chains.
Yeah, I mean, we've still got a lot of brands, and we have new brands, and we have brands who have changed their offer, like Waterstones. So Waterstones are now rolling out small stores in suburbs, which we never thought we'd see. We thought they'd always have the huge bookstores in city centres, which they still have, but they're actually rolling out to suburban locations where lots of people work from home because they've realised that that's their new market. Costa, Starbucks, Cafe Nero have completely changed their acquisition requirements in terms of location based on how we've changed since the pandemic in the way that we work. So because we're working in different places and spending more time at home, they're popping up in locations that you wouldn't have expected them to open before. So they are really just following the trends. Now, there's lots of independent clothing retailers. Some clothing retailers have come back to physical stores. So they're doing both. They need to be physical and digital these days because what they've realized is particularly for the older demographic like me, um, we don't like shopping for clothes online. Like I don't know about you, but I can't stand all the it arrives, you try it on, it doesn't fit, you've got to send it back, you've got to I just want to go to a shop and buy some clothes. It's still evolving. It's evolving with us and with what we want. But yeah, the banks will never come back. Everybody's gone online for banking. So now in the place of banks, we have the banking hub, which is the post office and the banks sharing space, and the banks open 1 day a week each in that space. And that's what we've got because that's all that's required. Pharmacy, a lot of pharmacies going online or into the supermarkets. So we've got a lot of pharmacies closing down on the high street. But in their place are the new entrants. Like we don't have a lot of butchers and greengrocers and that kind of thing on the high street anymore. But in their place, we have a lot of professional services, healthcare services, and a lot of independent businesses. So in a lot of towns, like market towns and suburbs in particular, retail's thriving because it's too far from a big town or people just don't want to go into a big town. But there's always now going to be a quantum of cafes and restaurants and takeaways because that's also what we use our high street for.
And when the lenders are now looking at the commercial properties, the retail properties that you have, and which tenant you have in, are they still looking at like the top tier tenant, your grade A's, your grade B's, and your grade C's? Are they still doing that?
Not as much after the pandemic because the brands behaved so badly because they stopped paying their rents just because they could. It's not they couldn't pay their rent. They just didn't pay their rent because the government put a moratorium on rent arrears recovery for a year. So they just didn't pay. And actually the banks have gone, well, that's not great, is it? Because then obviously they had lots of landlords struggling to pay mortgages. Whereas the independent tenants, the small mom and pop businesses, as we like to call them, they all paid their rents. They got grant funding, they paid their rents, they carried on. So I had 15 high street tenants on the day that lockdown started. And I went, oh. I actually said something much stronger than that, but I won't say that on here. I was just kind of, oh, right then. Okay, and we had to work together. and I helped them get the grant funding, but I made it clear to them that, look, I'm a small business too. Like, I am a landlord, but I'm a small business landlord. I'm not a major fund who can just let you not pay your rent. And do you know, I didn't have a single penny of rent arrears all the way through the pandemic, and I only lost one tenant.
It's amazing.
So this is what I want to get out to people, because this is not what people read. This is not what people think they know about the high street. And it's kind of, look, invest in the right kind of businesses that are in demand, that are sustainable, and strong businesses. So you've got to do your due diligence on the tenants, because it's all about the tenants and the lease in commercial. But it's not that the brands are totally out of favour. They're not with lenders, but lenders have a much different view than they had before the pandemic for the smaller businesses now. So if you can put multiple smaller businesses together, the lenders like that just as much
Okay.
as the brands.
So let's macro it out a little bit, and we've got the whole of the UK with however many different high streets we've got. What are the top 3 things that you hope for in a high street before you would invest in that for either yourself or your clients?
So we don't want lots and lots of vacant units. It's okay to have a few, because there'll be reasons behind that, but not more than 15% maximum. 5% is better, but up to 15% of the high street vacant. Parking. We are lazy and busy. If there isn't parking outside or very, very short walk, that high street's not working. And the parking needs to be free or really low cost. So
Yeah.
huge car parks on street, if possible, so you can just pop in and out. Big car parks, low cost. If it hasn't got that, I'm not in. I'm out, because that's what works for a high street. So we need low vacancy level, parking, and then tenant mix is my third one. So I want to see a few brands at least anchoring the high street. And then I want to see a really good mix of tenant type. So not high streets where you've got 14 barbers and 10 vape shops and 12 takeaways. You know, it needs to be a really strong mix of services, retail, leisure, cafes. You know, if it's got that mix, I'm going, right, this is a high street where people get things done.
Yeah.
And that's what you're
Yeah.
looking for.
I think that parking one is it's so important, and it's my town that I live in, about 8 months ago, they brought in paid parking on the high street, and it has affected the retailers, and they are really upset about it, and there's lots of petitions to try and change it, but it's not changing. I don't think they'll definitely won't take it out for a few years until they've really proven their point that it doesn't work. But it's one where you could start, your investment career in a high street, and it works, and then the council come and do something like that, I guess. But it does have a big effect, doesn't it?
It does, yeah. So you have to get involved in that. If it happens, then you have to talk to your tenants and understand what the impact might be. And it's for landlords to lobby the local council and because they just don't understand. They don't understand the impact. And because the choice is, oh, I can go to a retail park, which might be a bit further away, but I can park for free there and everything's immediate. Or I now go to the high street and I have to find money to park every time I go. And it's, and the other thing that works well is if you've got supermarkets on the edge of high streets, because they always have 2 to 3 hours free parking. So what a lot of people will do is they'll go and park at the supermarkets and then walk into the high street. So, I'm always looking on Google Maps if I've not been to a location before, going, is there a big supermarket or two, and where, because that's always very useful.
And what about price then? So, in residential, you get rents are, whether they're Midlands or the North, there's slight differentials, but it's not a massive swing, really, excluding the big cities. Is the same in the case of in commercial rents, in the high street rents, where your tenants in the Northwest could be paying the same as your tenants in the Midlands?
Um, Yeah, it completely depends on where in that high street they are as well. But there isn't there isn't a huge difference in rents. There is in the cities and the suburbs and the market towns. That's the difference. Rents will always be a bit higher in the southeast, just because there's more demand. So it's all
Yep.
about supply and demand. But the rest of the country, it's similar as long as you're comparing similar locations. So compare cities with cities, suburbs with suburbs, and market towns with market towns. And then yes, rents are similar.
Yeah. So presumably then there are some areas where, the not that it's a great descriptor of any investment class, in my opinion, but yield is, higher.
Yeah, so again, there's a differential between the southeast and the rest of the country. So the rest of the country, 10 to 12% at the moment in the high street. The southeast, 8 to 10.
Okay.
There's usually about a 2% yield differential between the southeast and the
Yeah.
rest of the country, and that's a supply and demand function. There's more investors investing in the southeast than everywhere else in the country, and so it pushes prices up and yields down.
Okay. So another thing that a lot of people like to say about commercial when they're not in it, or they, just heard it from a bloke down the pub, is, oh, it's all well and good when you've got your tenant in, but when they leave, you'll have a void for a year because it's very slow moving. Is that the case?
No.
Okay.
And well, for two reasons. So the first thing I always like to say is that um, tenants' businesses in the high street fail a lot less than people think. So here's another statistic for you that might help with that, which is that in 2024, retail failures were 50% less than the pre-pandemic failure rate. Okay.
That's
So
massive.
yeah. So pre-pandemic, if people think about the world we lived in then and what we were thinking about, oh, businesses failing, and it was pretty calm. And then obviously the pandemic happened, and actually we've gone back now to less than 50% of where we were before the pandemic in retailer administrations. Which again, if you read the press, they only ever report closing down. This business is closing. They're leaving the high street. They're closing stores. They never report, oh, this business is on an acquisition trail. They've just taken 20 new stores. Here's a new business entering the high street. And they don't report any of that. So there's a lot less failure in the first place. The second thing is, as a commercial investor, you will be asset managing. So you won't wait until the end of a tenant's lease to find out what they're going to do. You'll ask them 18 months before, what's your intention? And you'll relet it before they leave.
Yeah.
So that's what we do. We don't wait for voids. If we do have a void, usually around 3 months, if you've invested in the right high street, is how long it takes to find the right tenant.
Okay.
Now, if you're holding out for a brand, it will take longer. So some people use the strategy brands in boxes. The brands don't move quickly. I've just renewed a lease with Greggs, and I knew it was going to be painful, and I was absolutely right. Um, and it's taken me 6 months to get that agreement for lease over the line and get them. It's just been painful. They don't move quickly, the brands. So if you want to hold out for the capital value that a brand will bring you, landlords will often choose to hold their void for longer in order to wait for a brand to be ready to take a long lease.
Okay.
So that sometimes happens. But if you're open to who your tenant is, it should be around 3 months in the right high street.
Okay, so we've discovered that the high street location, or the choosing of that high street and the DD around that, is really important. So we're looking for low vacancy rates, free or cheap parking, and we're looking for a good mix of tenant type and supermarkets on the edge. So I think that's amazing practical advice already. What about things like size of the retail unit? Because I know from having had commercial property that the things that can really hurt a business are the business rates and the energy costs.
Yeah, absolutely. So, in high streets, it's better to have multiple smaller units than the bigger units because there is less demand for the bigger units. There's only so many big discount retailers and people that are taking bigger spaces. So I always focus on the smaller units. Now, having said that, sometimes you'll find, as I've just found with Greg's, they had less than 1,000 square feet. They've just taken an additional 1,000 square feet because their strategy is now in-store dining. So like they want people to dwell, so they need more space for seating, etc. But most of the time, 1,000 square feet and under is your ideal size.
So would you look for potentially vacant units that you could put 1,000 units
Yeah, yeah.
in? Yeah.
Yeah, and that's a strategy I use myself, is splitting up bigger units, because then it also takes the business rates down, and it should take the tenants under the business rate threshold. And yeah, you need to look at energy efficiency as well, because retailers do look at total occupancy costs. So tenants are thinking about the total cost of occupying that space, not just the rent. And if you can keep the other costs down, they can afford to pay you more rent. So it kind of feeds into your rental negotiation.
Yeah. And what about length of lease? Because again, that's another one that people have lots of opinion on.
Yeah, it's definitely changed. I mean, there's no more, well, there's hardly any, I won't say no more, but there's hardly any 20-year leases going on um, anymore. So you might get that from a takeaway tenant, or a few independent businesses want that length of lease. The brands will take 10 years with a break at 5 as standard, and smaller businesses will take 3 to 5 year
Yeah.
leases. Sometimes they'll ask for, or can I have a 1 or 2 year lease? And I say no.
Okay.
You need to
But
know how to add your value as a landlord. I never accept a break other than from a brand, um, because that's just their standard term and they will not move. Whereas you can negotiate with the independent businesses. So our standard term is 5 years, no break, and we'll negotiate with them on the rent.
yeah.
Because what's more important to you as a commercial investor, it is actually the length of lease than a higher rent. So if you lose 2 grand a year in rent, you'll gain a lot more in capital value if you've got a 5 year lease than if you agree to a break at 2 years and get an additional 2 grand a year rent. So you've got to know what you're playing with when you
Yeah.
negotiate those tenancies.
And then is it practice that you would have 3 months free rent or 3 months half rent? Is that a standard thing across all high streets, or is it very geographically placed?
It's really up to the landlord and the condition of the unit. So if the condition of the unit is move-in ready, then I don't offer any rent free. So if a tenant asks for it, I might give them a month. If they don't ask, they don't get. This is an investment. It's not a charity. Um, Now, if the unit needs a bit of work and the tenant's going to do that work, then I might give them 1 or 2 months rent free to do that. But ideally, you don't want to give any rent free. So it's not really standard. The brands will ask for rent free if they've got to go in and fit out, and they will ask for 6 months rent free because they invest heavily. A smaller business might ask for 3 months rent free, but they rarely get it from me or a lot of my fellow commercial investors because we make sure that our units are in a lettable condition. So my argument is, well, it's going to take you a week to brand your unit and be ready to trade. Why do you need 3 months rent free?
Yeah.
Like, what would you be doing in that time that prevent you from making money to be able to pay your rent? So, and we always take rent deposits from smaller businesses as
Okay.
well, security. So we do take a 3 month rent deposit, because it's just much easier to implement than a guarantor.
Yeah. So let's talk about then some of the differences between, because I think a lot of our listeners will probably be more residential focused. And, when you're renting out a house, you have to have a certain certificates in place and the house has to be up to a certain standard, and your deposit has to be protected nowadays. So how does that compare with commercial? Because the deposit, am I right in thinking that has to go into some sort of bank account that accrues interest and then they get the interest? Is that how it works?
No, there are no rules around it. So there is good practice but there are no rules or regulations. And that's really how commercial property works. So it's very landlord friendly. There's a lot less regulation for and compliance for landlords to deal with. So tenants are responsible for nearly everything in commercial investment. They're responsible for compliance, for maintenance, all costs. There's no cost to you as a landlord. And yeah, we don't. So the deposits, there's no deposit scheme. There's good practice, which is to put it in a separate interest bearing account, but you don't have to. There's no consultation. If you want to draw down on that deposit, you go on what you've documented in the lease and you tell the tenant that you've done it, and then they have to top the deposit up. So there's no long eviction, costly eviction process. You can change the locks if they haven't paid their rent and forfeit the lease, but then you've got a vacant unit, which you don't really want. So what you want to do is use the 21-day process that we've got that says 7-day solicitor's letter, bailiffs. You very rarely get to bailiffs because businesses don't want bailiffs upsetting their staff or their customers. So I think we've got more teeth in commercial, to be honest, if we do have tenants who are poorly behaved. But to be honest, in 25 years of managing high street property, I haven't had that many tenants who are poorly behaved. They're businesses. It's not as emotional as residential investing, I would say, because it's not somebody's home.
Yeah, they want to succeed as much as you want them to succeed.
Yeah, it's a business. So there's a lot less to think about. It's long leases, so there's less administration to do with constantly renewing tenancies. There are a lot less boxes to tick. So for a commercial landlord, there's usually only 2 obligations, sometimes 3, depending on the property. So the first is to give the tenant quiet enjoyment. So don't interrupt their trade, don't disrupt or cause nuisance. 2 is to insure the building, but then you get to recharge the cost of the insurance to the tenant. And 3 is if it's a multi-let building and there's a service charge, then you have to administer the service charge. So you have to provide the services for common parts or maintaining the structure of the building. And that's it. There's never any more than that for a commercial property landlord to be thinking about.
Well, I have to say, with the renters' rights bill coming up this year, apparently, and all the changes in tax and everything, you are certainly making this sound really attractive.
There's always something to do. There's always something that could come up, but there just is a lot less to think about in terms of management. It's a lot less hands-on as an investment strategy. So once you've found it, purchased it, and let it, you sit back and you take the income. There's very little to do. And from a tax perspective, stamp duty is a lot lower. So there's no additional stamp duty. Stamp duty hasn't changed. It's 5% above 250,000 with a flat rate between 150 and 250 of 2%. So it's a lot lower in costs. Yeah, I guess it's just different. You can claim capital allowances. You can invest your pension directly into commercial property. So it ticks a lot of boxes for a lot of people who are looking for something that's, not as challenging as some of the residential investment has become, or just want to diversify so that they're not solely invested in residential.
But I think the key is like coming right back to where we began, which is in that selection of the property and the area is probably the most important thing of the whole process.
Yeah, absolutely. If you get your due diligence wrong, it won't be a good investment, So you've got to do that due diligence on, firstly, location. Are rents stable or rising? What's the demand from, it's all about serving demand. So basically we're thinking about, what kind of businesses want space, who's growing, who's sustainable, and that's who you want as a tenant, established business if you can find them as well, rather than startup.
And if there's people out there that have got the capital or the pension funds that they want to push into commercial, but they're not quite sure where to start, is that something you can help them with?
Yeah, absolutely. We do that all the time. And so we specialize in helping people who want to diversify into commercial or have got a pension and have never invested in commercial before and just don't really know where to start. So that's who we work with day in, day out.
Amazing. So if people wanted to get in touch with you, Kirsty, just to explore this a little bit more, because you certainly made it sound really good and you've made me feel really positive about the high street.
Good.
So how can they get in touch with you?
So they can go to our website, kdcommercial.co.uk, or they can send us an email on info@kdcommercial.co.uk, or connect with me, Kirsty Darkins, on LinkedIn or Facebook, and we'll pick up your message from there.
Amazing. Well, I think you've definitely busted some of those myths, and I think we have a better understanding of the high street now. So as you say, we've made this, haven't we? We've created what we wanted through supply and demand. Everything comes down to supply and demand. So as you said, high street is there, it's just changed.
It's changed and it's recovered, so I think that's my core message is the high street has recovered. It's not in decline in most locations now. It's being repurposed, it's evolving, it's coming back up. And that's the point at which you want to invest. Now, don't wait for 3 years, because your returns are going to be lower in 3 years. Now is the high yields, is the opportunities, is not everybody piling in to the high street because they haven't realised what's happening yet. So now is a good time. And thank you for your questions. Really good question.
Amazing. Well, thank you so much, Kirsty. And it was a pleasure to talk to you. And hopefully some people have got some really good practical tips from today's episode.
Yeah, I hope so. Thanks, Sarah.